Hello and welcome to the Currency Exchange, NatWest Markets FX podcast, where we break down the major themes and events driving currency markets this week and the week ahead. Today I'm joined by Aditya Sharma, who is our Asian FX strategist, and we are doing an emerging markets special this week. Aditya, I guess the big thing that really kind of rattled your markets recently was finally getting this announcement of an Indian-US trade deal. How, I guess, does it really reshape your view of Indian assets and their performance?
Yeah, so last weekend we finally saw a trade agreement between India and US. I think this deal changes outlook on Indian assets quite significantly because the sentiment on Indian assets had worsened quite a lot since quarter 2 2025. First, because of the India-Pakistan border clashes, and then the tariff uncertainty. Trump initially told that India and US would be the first to sign a trade agreement, but that completely flipped. There was no agreement with India until the end, whereas all the other trading partners of India were able to conclude an agreement with US. So that had actually impacted sentiment towards Indian assets quite significantly. And then on top of that, we got an additional 25% penalty for buying Russian crude oil. So effectively, tariffs on India were around highest among all the trading partners at around 50%. And we were seeing outflows out of Indian equities, longer term investments into India, FDI inflows were slowing down quite a bit. So with this trade agreement, which has brought down the tariffs on India from 50% to around 18%, that reduces quite a bit of uncertainty and makes India's exports competitive again. I see portfolio flows into India rebounding again because of this trade deal, and longer term investments also should eventually start to pick up from here.
It's interesting what you say, because this agreement actually kind of came when US-Indian kind of trade relations were at their worst. As you mentioned, there's additional tariffs because of Russian oil purchases. I noticed that in part of the agreement, India has now kind of agreed 500 billion USD in terms of US good purchases. How are you looking at that from your point of view?
Yeah, so it's interesting that you bring that up because there was mention about $500 billion worth of purchases from India, worth of US goods purchased from India. But then later on, there was a clarification issued from both sides that it's just an intent and it's not a legal binding compared to what US has with Korea, Japan, or Taiwan. So I don't think that's a commitment from India's side that India would be buying $500 billion worth of goods. Although India's trade minister recently stated that India has the capacity to do that over the next 5 years. I don't think India would want to do that because India has around a trade surplus around $50 billion with US. So if India ramps up that purchase to $100 billion per year for the next 5 years, that would completely erode India's trade surplus with US. So India would not want to do that. I think there is scope for India to ramp up defense purchase, some energy purchase from US, but that reduces that trade surplus with US completely over the next 5 years, and India would not want to do that. On the other hand, I think that India could not afford to have sit on the sidelines and not do a trade agreement with US. I think it was important for India at this point of time because all its competitors, all the Southeast Asian neighbors of India, and other Asian partners have already secured a trade deal with US. They had until now a better trade a tariff agreement with US ranging between 10 to 20%. So tariffs around 50% for India. I don't think India would have afforded to sit on the sidelines and see its export competitiveness getting completely wiped out at this point of time.
Yes, super interesting. So I guess don't take that $500 billion figure at face value. And I guess, what does all this mean for the currency? What is your outlook for the Indian rupee? And I guess, how has it changed in light of these developments?
Yeah, in light of this development, my outlook for Indian rupee is now positive. We think the sentiment towards Indian assets is gradually going to turn. We are already seeing some pickup in inflows into Indian equities already. And I think that's going to translate into gains for Indian rupee too. I think there was some apprehensions that probably inflows into India would translate into gains for Indian rupee, and maybe they are going to be focusing on building back FX reserves. But I don't think RBI would want to do that at this point of time. Reserves stand at a healthy level of around $723 billion. And Governor Malhotra, in its recent central bank decision, stated that RBI is not looking at any levels at this point of time. It might want to curb volatility. So I still think that RBI would not want to lean against appreciation pressure on rupee at this point of time. So yeah, any pickup in flows is likely to going to be meaning gains for rupee too. Against other currencies, I see Indian rupee gaining the most against Indonesian rupee. The picture for rupee is quite in contrast with what we're seeing for Indian rupee, because MSCI recently stated that they might be looking to downgrade Indonesia's to probably frontier market status by May if they don't improve their transparency status and of public equities, and they don't improve the free float percentage levels in their um, public equities. So that's created some caution around Indonesian equities, and that's led to outflows from Indonesia. And I still see that story has more room to run. Maybe investors are likely to remain cautious on Indonesian assets because of that. At the same time, you had concerns about central bank independence. You have president's nephew being appointed as deputy governor of Bank of Indonesia, and you also had other headwinds about of Indonesia not being able to meet its fiscal deficit target for the year, and Moody's rating agency recently downgraded Indonesia's outlook from stable to negative. I see all those factors weighing on Indonesian rupiah, whereas I see the outlook turning more constructive for rupee. Yeah, for that reason, I see rupee gaining the most against rupiah at the moment. Turning to your region, Eimear, I see that you have just published a report on Hungary's upcoming election. Why do you think this is such a high stake election at this point?
Yeah, absolutely. This has been a focus for markets for a while, and this is kind of a very, I guess, stark choice that voters are facing. So they can either choose the ruling Fidesz party, which is the continuation of a liberal democracy, or they can choose TISA, this upstart opposition party, which would really return them to the EU mainstream. TISA, the opposition party, has basically kind of promised to end corruption in Hungary, to return legitimate democracy, and to have a better engagement and better relationship with the EU. I think why this is really capturing the market's imagination is that this is the first time in 16 years of uninterrupted Fidesz rule that actually Hungary has the opportunity to see someone else come to power. If you look at opinion polls, they're effectively neck and neck, with each party polling around 45%. And actually, Polymarket gives the odds at 55% to the opposition coming into power.
Yeah, it's interesting. You're calling for Fidesz to retain power in the vote despite the tight opinion polls. Why are you taking such a strong view over there?
Yeah, so I would say the big thing here is that opinion polls are always based on the popular vote, but that is not how Hungary's election is run. Actually, ever since Fidesz first came to power back in 2011, they basically reworked the electoral system in their favor, effectively embedding through kind of multiple institutions of the electoral system that it always favors the biggest party. And obviously the biggest party is Fidesz. So I think, the three things to look at here are gerrymandering. So in Hungary, there's kind of two parts to the electoral process for the parliamentary elections. You have constituency votes, and you also have the party list, which is done at the national level. When it comes to the constituency votes, gerrymandering has been used to effectively rewrite those constituency borderlines to effectively favor Fidesz. So you'll find that any kind of left-leaning constituency has a much bigger kind of geographic spread, which effectively means that each vote counts less. Then we come to the party list, so the national contest. And the really interesting thing here is that Fidesz have implemented something called winner's compensation. You don't see this in any other kind of parliamentary electoral system. Frequently what we do see is a loser's compensation. So that effectively, if a candidate loses at a constituency level, he's kind of compensated for it at the national list, national election, which is to increase representation. But it's a little bit conspicuous why you would want a winner at the constituency level to be subsidized for the votes that they win above and beyond those that they actually need. The net effect is that, it favors Fidesz. So we've seen in previous election that it's actually increased their vote totals by between 14 and up to 20%. We think that in this election, because you do have a more united opposition, that increase in subsidy will be smaller, but it still leaves it around 8 percentage points. The third factor is specific demographics, specifically ethnic Hungarians, who basically do not reside in Hungary but are given a vote. They actually represent pretty sizable portion of the electorate at around just under 6%. They vote in the party list election only, which basically gives them a 3 percentage point sway, but also they are overwhelmingly Fidesz voters. So, if you look at, the election back in 2014, 95.5% of them voted for Fidesz. So we think this, adds an additional 3 percentage points to Fidesz's total. Taking this in aggregate, effectively the opposition TISA party would need to be polling 11 percentage points above Fidesz in opinion polls to even have a chance of winning a majority in parliament.
And in your view, if Fidesz does win, how will that impact markets?
Yeah, well, it's really interesting because there's an asymmetric reaction function when it comes to the market reaction here. So if Fidesz wins, we could see, Euro HUF trading higher, so HUF weakness about 1%. We think that investors would automatically effectively cap that HUF sell-off, and they will use it as an opportunity to buy HUF at attractive levels because we're still against this global backdrop where, it's low carry, you've got Fed easing, you've got the outlook for a weaker dollar and really abundant global liquidity. So investors are looking for entry opportunities to go long high carry MFX. On the other hand, however, if the opposition TISA party wins, I think you will see a much bigger appreciation of HUF. So in the initial days, you're looking around 2.75%, but it could extend beyond that. Remember, this is Hungary finally coming back to the EU mainstream. It's really compounding that, positive story about high carry, a credible central bank, abundant global liquidity. So we think, over the subsequent year, you're going to see minimum 6% appreciation. And we've actually changed our forecast for Euro HUF. So we're calling for Euro HUF to trade around 368 by the end of this year, basically, on Fidesz win, but also on this very positive backdrop for high carry MFX. Well, we have covered some very varied aspects of emerging markets today. DJ, thank you so much for joining me. And thank you everyone for listening in. If you did like the podcast, please do remember to click like and subscribe so you get the latest episode first. Thanks again.